Hello students, welcome back for the part 4 session. Chapter named Branch Accounts, Subject Advanced Financial Accounting for BCom second semester. In the last session we have learnt about the invoice price method calculation as well as some of the illustration which we have also solved. In this session we are going to solve some more illustration. Let us start with one illustration. In this illustration, Bangalore is the head office where it is located and Mandya is the branch. For them, the head office is sending goods at invoice price, which is 20% profit on sales. Then the head office sends cash to the branch and all expenses are met by the branch manager. In this, almost all the expenditures which will be the cash will be sent by the head office, but some expenditures which will be paid by the branch manager itself, that we are going to see in the illustration. From the following particulars, prepare the branch account with necessary workings in the books of Shining Shoe Stores. Then we have stock on 1/1/2014 with the invoice price, then debtors on 1/1/14, cash on 1/1/2014, furniture on 1/1/2014, goods received from head office, that is nothing but goods sent by the head office. Then we have goods returned to head office, then goods returned by debtors, cash received from debtors, cash sales, total sales. We have cash sales and total sales. You can find credit sales, discount allowed to debtors, expenses paid by the head office, then petty expenses paid by the branch, stock on closing date, and we have depreciation also. When we are started with the solution, always we need to think that whether we need to prepare memorandum of debtors account or not. Let us see, is that required to prepare memorandum of debtors account or not. So as you can see in the illustration, opening balance of debtors is there, but closing balance of debtors is not there. That is the missing information we are supposed to find out by preparing memorandum of debtors account. Now we got to know that we are supposed to prepare the memorandum of debtors account. Let us start with it. When we are preparing memorandum of debtors account, you should know the format as well, and also we need to find out which particular item will be related to memorandum of debtors account. First we'll mark those items, then we can fill those entries, so it will be helpful. First you can see stock on 1/1/2014, which will not come for debtors account. Second one, debtors opening balance will come for that. Then we don't cash we are not going to consider, furniture we are not going to take, goods received from head office we are not going to take, goods returned by to head office we are not going to take, goods returned by debtors, so that will be considered. Cash received from debtors will be taken. Cash sales and total sales we have, if we are minusing cash sales from total sales, we'll get credit sales. Discount allowed to debtors we are going to take. Apart from that, we have expenditures, petty expenses, closing stock, depreciation. So apart from that, we don't have any items which is related to memorandum of debtors account. So as you can see, this is the format we are supposed to use while preparing memorandum of debtors account. So same items will be occurred in this. So we need to fill the information whatever the items are related to this particular format. So let us start one by one. First, debtors, that is opening balance, amount of rupees 9,000. Then we have goods returned by debtors, that is nothing but debtors are nothing but customers. From customers, if we are receiving goods, that will be called as sales return, that is 480 I have entered. Then we have the third one is cash received from debtors. So we are receiving cash through customers or through debtors. That cash we are supposed to record on the credit side of the debtors account, which is amount of rupees 30,000. Next we have on the illustration cash sales as well as total sales. So those two they have given indirectly, we are supposed to find out the credit sales. From the total sales we'll have two things, one is cash, one is credit. So you can easily say by minusing 50,000 from 80,000 we'll get 30,000 as credit sales. Next we have one left out, that is discount allowed to debtors. So we are going to allow this discount to the customers, that will be taken here as discount allowed. Apart from that, we don't have any information in the illustration to consider under memorandum of debtors account. Rest of the things will be nil as bills receivable and bad debts. We required to find out a missing information that is required to branch account is debtors, closing balance. So I have done the total. Debit side will be more, credit side same total, and the balancing figure will be 8,220 as closing balance of debtors. We got the missing information, that is closing balance of debtors. Now we need to prepare branch account in the books of head office. Head office name is Shining Shoe Stores, which is located in Bangalore, and the branch which is located in Mandya. And the financial year will start from 1/1/2014 to 31/12/2014. This format I have given the heading as in the books of Bangalore head office 1/1/2014 to 31/12/2014. Mandya branch account for the year ending 31/12/2014. And the rest of the things is particulars rupees. Always we are going to start with the debit side by recording two opening assets. Let us check what are all the opening assets we have on the date of 1/1/2014. In the starting we have stock on 1/1/2014, invoice price 15,000 opening stock, that should be recorded under opening assets. Stock at branch with the amount of 15,000. Then we have the asset which is on the opening day, that is debtors on 1/1/2014 with the amount of 9,000. Debtors at branch amount of rupees 9,000. Then we have cash with the amount of rupees 400, which is on the opening day. Cash at branch or petty cash at branch 400. Then we have furniture on 1/1/2014 with the amount of rupees 1,200. Furniture at branch amount of rupees 1,200. Apart from these opening assets, we don't have any opening assets on the date of 1/1/2014, as you can see here. Let us go with the next item we are supposed to record under branch account is opening liabilities. As you can see, the opening liabilities in the illustration, we don't have any opening liabilities. Usually the creditors and outstanding expenditures will come. We don't have any of that. Next we are going to start with goods sent to branch. Whatever the goods which is sent by the head office to the branch, we are supposed to record. As you can see, goods received from head office is also nothing but same. That amount we are supposed to record, which is the amount of 80,000. And if any returns is made by the branch to the head office, we are supposed to record. One return is there, which is the amount of rupees 1,000. By deducting it, we'll get 79,000 as total goods sent to branch. Then we need to record bank account. Remember, while recording bank account on the debit side, we are supposed to take whatever the expenditure which has happened to the branch. For that expenditure, the head office need to pay the money. Then only we are going to record it, because we are preparing the books under head office. That is the reason the expenditures as well as income which is related to the head office we are supposed to take. Let us take the expenditure which is related to the branch which is sent by the head office. Here you can see expenses paid by head office. For the expenditure, the money which is paid by head office, one is rent, which is the amount of 1,200. Let us record it. Rent 1,200. One more expenditure is salary, which is the amount of 2,400. One more we have a stationery, which is the amount of rupees 300. Apart from this, we don't have any expenditure. Petty expenses paid by the branch itself, that is the reason we are not recording it. If it is paid by head office, if the money which is sent for petty expenses, then we can record it. Next account we are going to record with bank account on the credit side, which is remittance, which is nothing but income which is generated by the branch which supposed to send it to head office. In some illustration they may give what is the amount of remittance which is sent it to head office, they will give directly. If not, we need to consider first cash sales 50,000, then amount or cash which is received through debtors or customers, we are supposed to record it, as we are having the money of 30,000. Total is 80,000. And when we are recording any expenditure which is made by personally with the branch, then we can deduct from the total income before sending to the head office. Next we need to close the assets. Whatever the assets we have opened, that's supposed to close. First we have opened stock. They have already given the closing stock, that we need to record 14,000. Then we have opened debtors. that also should be closed. For this we need to see the memorandum of debtors account. There will be a closing balance what we have find it out, 8,220, that we are supposed to record here. Next we need to close petty cash at branch. As in the illustration we don't have any petty cash on the closing day, but we need to close that account. That is the reason first we are always supposed to take what is the cash balance or petty cash balance which will be held by the branch on the opening day. On the opening day they had a cash of 400. Then we need to check is there any cash which is paid by the head office, that will be added. But here head office has not sent any cash or petty cash. Then the branch which met expenditure which is petty expenses, that is 280. So we are going to deduct it and we are going to get the balance as closing balance, that is 120. Then we need to calculate furniture at branch on the closing day. We have a opening day furniture value is 1200, as it is fixed asset. Closing balance will be also same until if they have given depreciation we are supposed to deduct depreciation from that value, then we need to take the amount. They have given depreciation 10% per annum. Amount is 1200, which is on 10% is 120. If I deduct it I'll get an amount of 1080. Apart from that we don't have any closing assets we are supposed to close. Then we need to close the uh, liabilities. As we don't have any opening liabilities, that will be also nil. Then we need to record with the three new entries, which is a stock reserve account on the debit side, stock reserve account on the credit side, and also goods sent to branch account on the credit side. These three accounts we are going to record in order to find out what is the profit amount which is included in the stock as well as goods sent from the head office. That we need to find out separately. For that we need to check what profit margin they have given in the illustration, whether it is on sales or whether it is on cost. As you can see in the illustration they have given profit margin, that is 20% profit on sales price. As they have mentioned on sales, we need to take 20 divided by 100. This rate will be taken on opening stock, closing stock as well as the goods sent from the head office. First we'll take on closing stock, which supposed to record on debit side. As we have closing stock 14,000, as they have mentioned 14,000 is included as invoice. They have already mentioned in the illustration. For that 14,000 I need to take 20 divided by 100. Amount of profit is 2,800. Next, stock reserve account on the credit side. This stock reserve account we are going to take on opening stock. As you can see in the illustration, on opening stock also they have mentioned as invoice, which means the invoice which is included on that stock, that is 15,000. On that I need to take 20 divided by 100, I'll get 3,000. Next I need to go with the goods sent to branch. I need to take the total amount after deducting returns, that is 79,000 into 20 divided by 100. On this also the invoice will be included. That is the reason we are finding out separately. The total is 15,800. After doing the total we are going to get the total more on credit side, 1,22,220. The same total on the debit side, and that will be in the name of general profit and loss account as profit with the amount of rupees 10,920. Let us solve one more illustration. Nischal Traders has a branch at Mysore. Goods are sent from the head office at cost plus 25%. The name of the head office is Nischal Traders. Branch is located in Mysore, and they are sending goods at invoice price, that is 25% on cost. We are supposed to take 25 divided by 125. The branch also purchases goods independently from local parties, for which payment made by the branch itself out of its collection. The branch is purchasing some goods directly with the local parties. For that branch is only paying the money, and that expenses which is deducted from the total income which is generated by the branch itself. The branch is advised to deposit cash periodically into head office bank account. From the following particulars, prepare Mysuru branch account in the books of head office for the period ending 31st March 2014. So we can take financial year as 1/4/2013 to 31st March 2014. Under that we have opening balances of petty cash, branch debtors, branch furniture, branch stock, which is include goods sent by head office as well as direct purchase, cash sales, credit sales, direct purchase, return from customers, then goods sent to branch at invoice price, cash sent to branch for petty expenses, bad debts at branch, then discount allowed by branch debt to debtors, cash received by branch from debtors, branch salary and rent paid by the head office, petty expenses paid by the branch manager, and the closing balance we are supposed to find out and we are supposed to enter, that is branch petty cash, then branch debtors, branch furniture, branch stock, goods sent by head office as well as direct purchase made by the branch. Then we have depreciation on branch furniture at 10% per annum. First, we are going to always start with a memorandum of debtors account. Check whether we are supposed to prepare it or not. As we have opening balance of debtors, but we don't have closing balance of debtors, then we need to prepare memorandum of debtors account in order to find out closing balance of debtors. Let us start it by finding out what items will be recorded on the memorandum of debtors account. Let us mark it first, then we can solve the memorandum of debtors account. First, we have branch petty cash that will not come under debtors account. Then we have branch debtors, that is opening balance we are supposed to take. Furniture we are not going to take. Stock we are not going to take. Credit sales they have directly given that we can take. Return from customers, that is nothing but sales return we need to take. Apart from this, we have bad debts. Bad debts we are supposed to take on the credit side. Then we have a discount allowed by the branch to debtors, that is for customers. Then cash received by branch from debtors. These entries we are supposed to record in a memorandum of debtors account, and we need to find out the missing information, that is closing balance of debtors. First, we need to start from the opening balance. So here first one we have branch debtors, which is the amount of 2,50,000, that is opening balance. Then we have in the illustration credit sales, which is the amount of 13 lakhs, that we need to record on the debit side in the name of credit sales 13 lakh. Then we have returns from customers to branch, that is nothing but sales return, that we supposed to record on the credit side 30,000. Then we have bad debts at the branch amount of 10,000, on the credit side bad debts 10,000. Then we have discount allowed by branch to debtors, that is the discount which is allowed to customers amount of 20,000, discount allowed 20,000. Then we have cash received by branch from debtors or from customers 12,50,000. Then bills receivable on both the sides will be nil as we don't have information of that. Then we need to close the memorandum of debtors account. The total will be more on the debit side, that is the amount of rupees 15,50,000, same total on the credit side, and the balancing figure of the debtors closing balance will be amount of rupees 2,40,000, that we are supposed to take to branch account. Let us start with the branch account in the name of Untitled Traders Mysuru branch account. As they have given the date is on 1/4/2013 to 31st 3/2014 in the books of Untitled Traders head office, and the Mysuru branch account for the year ending 31/3/2014. Particulars rupees and particulars rupees. While preparing branch account, always we are going to start from debit side by recording branch opening assets on the date of 1/4/2013 will be recorded to opening assets. We'll start with it. As you can see here, balance as on 1st April 2013. We have some assets opening balance. First one is branch petty cash amount of rupees 20,000. There is no necessity to record as order wise. You can start with any asset opening balance. Second one is branch debtors. We have amount of rupees 2,50,000. Then branch furniture 4 lakh. And then we have stock, which is both, one is received by the head office as well as directly purchased by the branch. Both will be taken into account, amount of rupees 4 lakh. Then we need to record, and you can see we don't have any other opening assets. Then we need to start with opening liabilities on the credit side. Under this, usually two accounts will come. One is creditors and one more is outstanding expenditures. So as we don't have that, it will be nil. Then we need to record with goods sent to branch. In the illustration, we have goods sent to branch at invoice price they have given with the amount of rupees 6 lakh. So this is the goods which will be sent by the head office to branch that we need to record 6 lakh. Then we need to deduct returns as we don't have any returns in the illustration. So the returns will be nil. The total will be same 6 lakh. Then we need to start with the bank account. As I told you, the bank account we are going to record whatever the expenditure which is happened to branch and whatever the money which will be sent by the head office to that expenditure, we are going to record with it. Here one expenditure which we have, that is cash sent to branch for petty expenses. For petty expenses they have sent money to branch, that we can record under bank account in the name of petty expenses, amount of rupees 25,000. Petty cash expenses 25,000. Then we have on the other side branch salary and rent paid by the head office. The salary and rent which will be also paid by head office, that we can record. If any expenditure which will be made by branch, for that if head office is paying money, then we can record that expenditure also under bank account. As we don't have any other expenditure which will be paid by the head office, then we need to go with the next account which we are supposed to record on the credit side in the name of bank account, which is nothing but remittance, the amount which we are supposed to send to the head office. As in the illustration we don't have any direct information, as they are sending money directly to the head office. If the information is mentioned in the illustration, we can take directly. If it is not, then we can start with cash sales, that is 4,50,000. Then we can take cash received from debtors or customers, that is 12,50,000. Usually these two incomes will be generated by the branch and that will be sent to head office frequently. The total amount by adding that will get 17 lakhs. From this we are supposed to deduct direct purchase which is made by the branch independently with the local parties. As you can see in the illustration, we have direct purchase with the amount of 4,50,000. As they have mentioned one particular sentence on the illustration starting, that is the branch also purchased goods independently from local parties for which payment is made by the branch itself out of its collections. Whatever the income they have received, from that income we need to deduct this direct purchase which is made by them independently with the local parties, that we need to deduct from the total income what the branch has earned. That is the total income 17 lakhs. From that we need to deduct 4,50,000. Totally we will get 12,50,000. One more information I want to give you, that sometimes the information will not be provided. Like what I have done in the last illustration, in the last session, I have taken directly by deducting direct purchase from the total income what they have earned. But one more thing, this direct purchase can be recorded on the debit side also in under bank account, because it is also an expenditure. For that money will be paid by head office. But in this illustration they have specifically said that the direct purchase need to be deducted from the total collections. That is the reason I have deducted it. If not, also you can deduct, or you can record that entry on the debit side under bank account in the name of direct purchase with the amount. Both the ways are correct and you'll get the correct answer also. The next account we need to record, that is closing assets. Whatever the assets we have opened on the opening day, we are supposed to close those assets. First we have opened petty cash. In the illustration we don't have any petty cash opening balance. We need to find out that. For that you need to start from what is the cash balance held by the branch on the starting day. The starting day, the cash balance which is held by the branch is the amount of rupees 20,000. The opening day they had 20,000 of opening cash. Then the cash which is sent by the head office, that is 25,000. And then we have petty expenses paid by the branch manager. So that is the expenditure, that is petty expenses we are supposed to deduct. So we had an opening balance of 20,000 on the opening day. Then we got a cash from head office, that is 25,000. We're going to add it. Then the branch manager has spent some money as a petty expenses, that will be deducted. Totally we will get 10,000. Then we have opened account of debtors at branch that we are supposed to close. For this we need to check memorandum of debtors account, because we have finded out the closing balance 2,40,000. That will be carry forward here. Furniture at branch we have opened, that we are supposed to close. Furniture at branch. In the illustration we don't have closing balance of furniture, as it is fixed asset. Whatever the opening balance we will have, that will be the closing balance. If we are having any depreciation, we are supposed to deduct that, and then we need to consider it as closing balance. 4 lakh, if I take 10% on that, I'll get 40,000. 4 lakh minus 40,000, I'll get closing balance as 3,60,000. Then we have opened stock at branch, both the goods which is purchased directly as well as sent it by head office. They have already given the information. Goods sent by head office as well as direct purchase, both will be considered, and the total amount is 3 lakh. Apart from that, we need to record closing liabilities, as we don't have any closing liabilities in the illustration. We need to consider it as nil. Then we need to record main entries, that is stock reserve. For this we need to check how much percentage margin they have given. Cost plus 25%, that is the profit which is on cost they have given. On the debit side, stock reserve, which is related to closing stock, that will be taken only on the goods which will be sent by the head office, because that will only include invoice price. That is 1,80,000 into 25 divided by 125, amount of rupees 36,000. The next entry will be on the debit side in the name of stock reserve account, which will be related to opening stock, which is only related to the goods which will be sent by the head office. We'll get an amount of 48,000. Then goods sent to branch, it will also include the invoice price, because it is sent by the head office. 6 lakh into 25 divided by 125, we'll get 1,20,000. So if you do the total, the more will come on the credit side, that is 23,28,000. The same total on debit side. Then we'll get a missing information as the general profit and loss account, that is profit, with the amount of rupees 5,67,000. I hope you guys have understood these two illustration. I'm giving two more illustration to solve by yourself. So solve this illustration. In this illustration, the date or the financial year is different. As you can see, 30th June 2014 is the end. You can start from 1/7/2013 to 30 June 2014. One more information you're supposed to know, that is a branch manager had purchased furniture 5,500 and kept 500 for petty expenses out of the total cash sales, and with the permission of the head office. And while doing this illustration, remember one thing, that 5,500 and 500 which have already taken from the cash sales, don't deduct again from the cash sales. It is assumed that those two amounts which have already deducted it, and these two amounts will be considered as closing balance. Furniture closing balance as well as petty cash closing balance we need to take. And solve one more illustration, which is the question number 10. This is the question which is asked in 2015. And if you are having any doubts, please mention in the comment section. And thank you for watching.